Today we bring on an old friend of the channel, Eric Krown, to break down Bitcoin's movements from a technical perspective. Eric Krown is an ex-market maker on the New York Stock Exchange and one of the most successful Bitcoin technical analysts and traders in the market that I know of today, and he's also a good friend. So please give a warm welcome to Eric Krown as we dive deep, dissecting Bitcoin's current movements and his predictions for what comes next. If you guys are excited for this, do us a favor, smash that like button, and of course remember, each and every comment on this video is entered to win your very own Ledger Nano S. And if you're not already following Eric at Krown's Crypto Cave, he's providing daily content tracking Bitcoin's movements as well as a lot of other assets. So if you're a trader, you definitely want to be following him. The link for that is in the description, and without further ado, let's dive in. Welcome back to the channel, Mr. Eric Krown from Krown's Crypto Cave. How you doing, Eric? Long time no chat.
Yeah, man, it's been a little bit too long. Good to see you, Elliot, and of course, good to be back with FUD TV. I always feel like this is the community that I kind of got started with, in a sense, man. Doing an interview with you about a couple years ago, and it's been a good friendship ever since. So glad to be back here with you and the FUD Nation.
I talk about Krown's channel a lot here on this channel because I've seen all the TA channels, and I just don't see someone who gets it right as consistently. And that's why we have you on today, man, is to bring some of your well-crafted opinions on these charts. Tell us what's going on. What are the charts saying, man? Because I think a lot of people are calling for some pretty historic movements here in Bitcoin. I mean, is that what you're feeling?
I mean, it's a pretty exciting time. Obviously, we can go into some charts right now. Just let me know when I'm actually sharing. But you know, it's been a pretty long cycle, right? We've gone through about 3 years of basically a very long form consolidation, very constructive over a long period of time. This is about when we last met, right over here, I believe, when Bitcoin was breaking down.
Yep.
And or sorry, when we first met, I suppose. But nowadays, man, this is a new era above 11,500 to 12,000. So to me, this is more glory time. So I guess I'll probably focus this analysis more so on long term, as I would imagine that's more so what this community wants to be looking at right now. And long term, you know, more or less things are good. Bitcoin's in the process of trending right now. It's in the process of breaking out. You know, there are some pretty nice targets overhead. Obviously, we're getting pretty damn close to one at the upper $16,000 level right here. That is a major area, though. So there's a couple of things that I probably want to highlight on a chat like this. In the sense that, yes, overall, I pretty much have a very strong demeanor with Bitcoin right now. I am overall just in bullish mode. Macro, I do believe, will go onwards and upwards. But, you know, I think the valuable thing that I can kind of maybe say in a video like this, hopefully, is, you know, even in these mostly upwards markets, we have to remember that very, very aggressive downside moves do happen. And they actually do happen, you know, historically speaking, quite frequently. If we go back in history right here, we can see several of very aggressive downside moves all the way through the run from 2015 to 2018, right? Which was a phenomenal run from about $250 to $20,000. That's, you know, a 7,700% increase, right? But along that way, there was, I think, 6 or 7 times where Bitcoin came down extremely hard over the course of about a month or two, you know, 20 to 30%, in some cases a little bit more, in some cases a little bit less. You know, just mark off a few right here. You know, that first one's about 25. This one's showing about 38. You can see there's a bit of a rhyme and reason on these, about 34% right there as well. And you notice going onwards and forwards, you can see this one's 35. They're all about the same. I won't bore you with the details of it, but I do want to caution a bit that while long-term and macro, I am mostly bullish on Bitcoin, and I do think that, yeah, I very dislike saying stuff like this as a trader, but as a long-term person, I suppose it is appropriate. I guess I am more or less bullish on the macro, looking for some more of those crazier targets to get hit. Short-term, or perhaps more medium term on this, I actually would be looking for one of those major pullbacks relatively soon. Anywhere, both these areas of caution right here, this January 2018 area, and then also, of course, your prior high at about $20,000 or a little bit below there, are two major areas right here where I actually would be looking for something like this to happen. And we're pretty close to one of them right now.
Is there any trend that you saw, any kind of consistency over the relationship between the dumps on the last cycle? Like, what were there any kind of proportional gains that then dumped after? You know, was it like a 50% gain before a dump? Was it a 2x before a dump during the last cycle? Was there any rhyme or reason to that? Because, you know, I sort of have been calling it, you know, the 14K boss battle, because we saw the 12K boss battle. And, you know, in these times, obviously, you know, my community is very, very, one of the things that Bitcoin has been very, very good at helping understand is when the altcoins really free up and start moving, because as Bitcoin stagnates or even kind of it starts to have a slow decline, as we saw with the 12K level, the alts really start moving aggressively. Right. And, I'd imagine that has a lot to do with these Bitcoin whales that once they feel like the motion of the ocean is slowed down, they start playing in the smaller caps. That's sort of my logic around it. But
yeah, I can go a little bit into that. Absolutely. So yes, what you are saying is 100% correct. What typically happens when Bitcoin is in a mode like this, and anyone who was around during 2016, 2017 will likely confirm this, or even prior to that as well. But basically, when Bitcoin does essentially go in these more long-form consolidation sideways, let's call it like a daily, which we're actually in one right now, to be fair. Actually, let's go back to this chart really quickly, and then I'll get on to that next point. But when it does something like this is typically when the altcoins actually do get a breather to catch up to Bitcoin. Now, the problem is, though, when we are looking at something like this, going down in lower term timeframes, is that once Bitcoin actually starts moving once again, breaking out either to the upside or the downside, in this case, I'm a little bit more angled towards the upside, I would be looking for those altcoins to once again give a lot back. But here's the thing. I noticed that on your channel, you're really at like the bleeding edge of finding these altcoins that are just, I don't think very many people know about them. Like that's a humongous value of your channel right now. And because of that, I don't really think that actually applies as much. In fact, those ones seem to be doing a lot better on these sort of sideways movements right here. But on the whole, if we're just looking at the crypto market versus Satoshis, especially, as that would be the best way to kind of relate the two. It is around these times that they get a little bit of a breather, but on the whole, when Bitcoin is in a macro rally stance like this, again, like you saw in 2016 and 2017 and a little bit of 2018, that's really not the time for altcoins, again, versus Bitcoin. Versus the US dollar, they typically do fine. But we have a chart for this, actually. You can look at the Bitcoin dominance over here, and I'm actually phenomenally bearish on most altcoins versus Bitcoin. Again, doesn't mean that I'm bearish on them versus US dollar. In fact,
phenomenally bearish.
yeah, phenomenally bearish.
Wow, that is a decisive run there on Bitcoin dominance. Decisive.
Yeah. Here is the Bitcoin dominance chart. Now, obviously, this is not going to be too useful because we should have been speaking about this about 6 months ago. But we did come down to this macro area just a few months ago in September, and that's where I was looking for a macro reversal on this. And within this, that really did set in a long-term bullish bias, a macro bullish bias, correlated with Bitcoin's essentially just breaking out of that 3-year long consolidation. So to me, that's a big deal. I know a lot of people right here are looking at this as a gap. It's not a gap. There's no such thing as a gap on a dominance chart. That's very, very silly stuff. Has nothing to do with that at all. This is an incredibly bullish chart right here. Looking at both the weekly and the monthly long term, I'd be looking for this one over the next 3 to 5 months to likely work its way back up above 70%. And most altcoins versus Bitcoin are going to get absolutely just creamed, very likely. Now, the ones that you typically cover on a channel like this, they don't really seem to fall into that category, which is very interesting to me. And it kind of and if I had to come up with some sort of a theory on this, which I'm just kind of talking out of my asshole right now, but if I had to come up with a theory on this, what I would say is that because the ones that you are talking about seem to be so new and on the bleeding edge, they don't have the history that you'd maybe find in an altcoin. Like where's my favorite one to pick on? Here we go, Cardano. This one has this is the best altcoin chart right here. So this one has a long history of just going straight down essentially versus Satoshi. And the problem with that is that
sorry, Cardano family. We definitely wish you the best. It's just the charts. The charts are not on your side.
Absolutely. And as always, I do want to, of course, separate an individual person from an inanimate object in the form of a token here, I guess. But but of course, a chart like this, which has just a strong history of going straight down and onwards, we can assume that there's going to be a lot of essentially hodlers who are just looking to get out at break even. And so it's a lot more difficult for something like this to rally up with the rest of the market, in the same sense that the coins that you're looking at, they don't really have that history.
Yeah. I call it gravity. I say that these old altcoins have gravity, right? When there's so many people who are holding and they're at losses, and you look at a coin like Cardano, which is in the billion. I don't know if it's in the billions of valuation, but it has been for a lot of its history. That's a lot of money that is looking to sell any pump, and so it hurts the rallies, right? Because if you're looking at these, and obviously we're going back to the dominance chart. I mean, a coin going from $800,000 market cap to 8 million, that doesn't affect the dominance chart very much, does it?
Yeah. Yeah, and that's the whole thing. And if you were around, even in the cycle before that, in I guess that was like 2014, 2015, you likely saw the same thing in the sense that all of the altcoins that were around during this time, they were completely irrelevant in the run from 2016 to 2018 right here. It's just, it's just kind of seems to be the cycle in the whole crypto landscape. So right now, if you are going to play the altcoins, if you are looking, to do better than or do well on the Satoshi pairing, then it's probably going to be the newer ones that are going to be a little bit better. Now, of course, it's naive to say that all of them are just going to be absolutely cream pied here, but for the most part, on the whole, I would be looking actually for full retraces on most altcoin versus Bitcoin pairings. Again, every chart that I look at is just god awful. I mean, we just looked at Cardano. That one's going back down to where it came from.
Well, let's look at a little bit more relevant altcoins, right? If you're calling them the new ones, let's look at Aave, right? Because Aave started out as an altcoin in 2017 called ETH Lend, and then became Lend. And I don't know if the ticker changed, but the actual branding changed, and now it's Aave. So if you look up Lend, Lend, Lend BTC. Obviously, it's a little hard because they just switched their ticker.
Yeah, it looks like they.
Yeah, maybe. But maybe, I guess let's just look at DeFi majors in general. Let's look at synthetics. Let's look at Maker, Compound. Let's look at SNX. And then, of course, I consider Chainlink, to be a relevant alt, right? And that's been around.
Chainlink is seems to be relevant as well to me. Looking at this right here, actually, no. When I look at this chart, I would not like this. Okay. To be fair, it's a little bit too young. To me, this one looks like it's actually going to start one of those perennial downtrends for a while. The problem is it's just too difficult for a lot of these altcoins to keep up with Bitcoin when it starts rallying. When Bitcoin moves in thousands of dollars, it's asking quite a bit. Now, again, versus the US dollar pairings, a lot of these guys are probably going to be holding at least sideways, and for the stronger ones, the more relevant ones, they will go up as well. But looking at this chart right here, I'd actually be looking for this one to go for, I'd actually be looking for this one to come back down to like 2,300 Satoshis and maybe lower. This is not looking too hot right now over the long period of time.
Let's look at Chainlink. I think Chainlink is potentially the tip of the spear for the DeFi, right? It spans DeFi, Oracle's data, and it's been around, and so it's got some history. I just want to establish, right, because obviously on this channel, I've kind of shifted almost exclusively to newer coins, right, and getting them, as they are newborns, literally, and because I believe that that's where the real opportunity is, and I think you're confirming that, right, is that after these coins get a certain amount of gravity, are in existence for too long, they just need all the stars to align, like they did in 2017, where every coin, Ripple went up 1,000x, right? And even though it had been around for 6 years, but you're essentially got to wait. You got to wait until that magic moment. But then you look at a Chainlink chart, and this one seems a little different, right?
It's 100% different, actually. Okay, so we're looking at the US dollar pairing right now. We'll look at the Satoshi pairing in a second, but I think that this is really important to just reflect upon for a second here, because this chart, ever since its genesis, essentially in 2017, it's been straight up. This is a weekly. This is phenomenally strong long term. I'd be looking for this one to go more up, actually, back up to $16 and probably beyond over the next couple months. Compare this with your average altcoin chart, right? We can be looking at, I don't know, let's look at Ripple, I guess. Ripple just goes sideways and down. It's a completely different chart. We can look at Litecoin, for example. That was another big one in the 2017, 2018 one, mostly sideways and down here too. These are completely different just eras that they're in right now. So looking at Chainlink, this one really does speak for itself. So right now is the time to be paying attention to things that have been putting in these very long form constructive formations over a long period of time, because they're going to be rewarded a lot more when Bitcoin actually does get going. I still do run by the assumption that Bitcoin essentially sets a tone for the market, and then altcoins get to follow in varying degrees of strength. Some get a little bit more for the very, very strong ones, which is the ones that I typically see you get. I don't know how you do it, but it's pretty crazy, man. I've definitely been watching it as of recent times. It makes me want to get in some altcoins myself, even though I hate to admit it. But for the most part, most of them do look like the charts that we just saw, mostly sideways and down over the last 3 3, maybe even 4 years. So something like this definitely does stand out, and there's very few of them. There's extremely few of them. So we want to savor those when we actually do find them. Now, here's the thing though. You look at this chart versus US dollar. Phenomenal, great, good, looking good. I'd basically be bullish on it for for a little bit more time. Looking at the Satoshi pairing, I would actually be quite bearish on this. Really? Looking at this right here. So what is that essentially telling us? Well, actually, short term, it probably does pop back up, to be fair. But long term, it's likely telling us that it's just going to be having a difficult time keeping up with Bitcoin, if Bitcoin does want to roll here. So I figure it might be a good time to actually go back to Bitcoin, because Bitcoin's actually very, very interesting in the short term timeframes. I know I said I wouldn't do too much short term today, but I do think that
I think people like to know the short terms right now, especially in this in my community right now. You know, Bitcoin making big moves does tend to suck the wind out of some alts, right? Whereas, you know, even though these new guys will do well, right? If you find something at, you know, a micro or a small cap, you know, under 5 million market cap, it goes up to 20, and then it'll hold there. But then if Bitcoin makes a strong move, sometimes that'll bring it back down to earth a little bit, right? Even though it's not hitting, maybe it's not as devastating as the bigger cap alts, it still affects those alts. Not the newborns, not the freshly minted ones, but the slightly older ones with more history on them, and that's how they start to enter into the cycle of like you say, the perennial downtrends.
Right. So short term on Bitcoin right now, it is actually looking pretty damn ripe for a breakout. Probably in the next 48 hours, maybe 72 hours at most. But what we're looking at right here is we're looking at an ascending triangle. These are typically bullishly biased reaccumulation formations. They have about a 66 to 68% chance to break out to the upside. In this case, I'd be looking at any sort of a 2-hour or 4-hour closure above this 15.8 pivot as very likely to get a continuation move all the way up to the 2-spot extension on the fibs right here, right around 17,000. We could also make a measure move on it as well. I believe I did it this morning. It was somewhere around the upper 16,000 here region too. Now, of course, with all of these, there is a probability that they actually do fail. That would be happening with any sort of a closure below about 14.8, driving targets back down to about 13.8 region right here. So we're looking at a pretty big move, probably within the next maybe day or two, maybe even today. It's looking pretty damn ripe right now on the lower term timeframes, as we see all momentum oscillators turning up right now. Here's our 4-hour Stokes back in the bullish control zone, looking good. 4-hour RSI, very, very constructive right here. And
so how does this compare? How does this compare to what I called the 12K boss battle, where we essentially flirted with that 12K break? We closed above it. We kept getting rejected. It was this game, and to be honest, I don't believe that these Bitcoin whales enjoy just going straight up. They understand that by going back and forth at these critical levels, they keep accumulating, they take profits, they go and reaccumulate, a couple, 5%, 10% lower, and they keep playing this game for a while until enough momentum just pushes everything up and over.
Right. So 2 big points right there. The 12K boss battle, you're essentially referencing this area right here. This is a phenomenally historical area, right? Because this is the area that once it kind of left in 2018 off of this bull trap right here, Bitcoin never really turned back above it. And this is actually related to a concept called institutional order flow, which is essentially showing you where the big boys are getting their short fills in. You can see that anytime that Bitcoin essentially tested in this region, 11.5 to 12,000 over the last 3 years, there's been just immediate and very swift moves and very aggressive, violent downside moves. I mean, this is a 50% move over the next week, and eventually goes all the way down to like a 70% move. This one over here, pretty damn nasty as well, all the way to your coronavirus dump, or you can even look at it like here and then retest it over here and then back down again. These are big moves. So when Bitcoin turned the corner at what you say is 12,000 bucks, which is the 0.5 right here as well, that was entering into a new phase as far as the macro goes. So if you're looking at that as a boss battle, that was the boss battle, so to speak.
Gotcha. So it's not the same now. It's different now.
No. There's going to be pullbacks here, and that's the next point that I really want to get onto. So you brought up a really good point. The whales kind of like to play around with it. Well, the thing is that when you get over the hump like this and the macro structure changes from basically, everyone wants to be a seller at this area to now everyone, essentially looks at it as flipping to support, is there's really not any big institutional players who are taking massive shorts anymore. That's just not what the data shows. I know that a lot of people out there say X, Y, and Z is going short. We're not talking about that. We're talking about like the big boys who actually move this market. And when you get into a scenario like that, the way that these guys, they still have to generate liquidity for themselves in order to continue to move the price action to the upside. So how do they do that? Well, it's kind of what we alluded to at the beginning of this video right here, in the sense that you get those very aggressive moves to the downside. And that's how these people are able to essentially pick up the what either stop losses or liquidations, depending upon how cavalier you're feeling, of the more over leveraged people. And in a market like this, when you have several exchanges that are 100x leverage or more in some cases, which is insane, absolutely insane, you can get incredibly nasty downside moves. So as we were kind of speaking about before, typically, historically, we've seen about 30s, in some cases a little bit more towards like about 50% moves. It usually comes down to the 21x Benchmark average on the weekly right here too. Bitcoin just has a lovely history of playing off this. Anytime that, I mean, just in general, by the way, just as a small side, anytime that Bitcoin's just generally been above the yellow 21 and it has a positive slope, those have been your bull markets, keeps you long all the way from $5 to $1,000, so fair enough. And then same thing over here from about 250 all the way to 20,000 as well. Works to the downside here too. And more importantly, where would that 21 be coming in right now? Well, funnily enough, that would be coming in around that $12,000 region. Ooh-wee. And at some point, I would be looking for one of those. I would be looking for price action to come back down and retest there. It's going to take some time. These things don't happen in in a day.
So you said there's an average about 30% dump in these bull markets, right? Something there. What would a 30%? Where would a 30% dump down to 12K? Where would that commence, right? If we were to look into a crystal ball.
Well, if you were to ask that question, it would precisely, if we were to take the next measured move off of this ascending triangle to the upside, which is basically in the upper 16,000, maybe even low $17,000 region, and then we shave 30% off that, it'd actually directly be back down around about $12,000, which is exactly where the 21 is right now. And also the 0.5 fib on a bullish retracement for this whole consolidation phase right here as well. So
translation. There is a likelihood here that if history is to be a guide here, that there would be a relative 30% dump off of the bullish sort of target that you're painting at, what you're saying about 17,000, something like that.
Yeah. I start to look at that area as a massive caution area. Could it be that Bitcoin just blasts its way above it? Potentially, yes, but we have a lot of things coming in there, not just all those measure moves, but also the 236 fib. Again, your big bull trap in 2018, that was the first time you put in a lower high in about 3 years. I mean, that's pretty significant stuff. So those are going to be your classic areas of distribution. And like I said, it's historically speaking, these things do take time on these reversals, on these short-term reversals. This one over here, I mean, this took about 2 months from reversal to next low. And by the way, there's a massive wick below, but no closures below. This one over here, about a month and a half. This one over here, 3-4 weeks. This one over here, a couple weeks. So, I just want to, I just say a little bit of caution. Of course, it can always be that Bitcoin just, does its thing and does something that Bitcoin, just does something that only Bitcoin can do. But as a trader, which is always where my perspective is coming in from first and foremost, I'm always thinking about risk management, always thinking about, taking some off and everything. And so historically speaking, that would be a very nice area, as well as even 20,000 here too. And of course, going back to the lower term timeframes here as well, I think that it is important to denote that just on the topic of looking for, potentially a move like relatively soon, we're seeing all of our lower term timeframes print really enticing reads on our historical volatility percentile. I want to give a shout out to the creator on this one. This is Caretaker's historic volatility percentile that I'm using right now, because I know that I'm going to get a million questions about this afterwards. And all good, it's free. You can use it on TradingView. But printing in the singular digits right now, it is suggesting that we're going to be looking at a move relatively soon. So while I am short-term bullish here to kind of explain this, I would be curtailing that a little bit, because yes, I am cautious about like I said, in that upper $16,000 region. And going back and over here too, you actually brought up a really good question earlier that I completely sidestepped, and that was is there any sort of like rhyme or reason, historically speaking, of what we typically do see on these momentous runs? Absolutely, yes. We do see plenty of times in the last run from 2015 to 2018 right here. The Bollinger Bands, as they're colloquially called, have been a damn good guide of when Bitcoin's trending. And the big thing with this is that it actually does have a pretty good historical signal. Anytime that you see it close above the top side band, that's typically entering into one of those more trending and momentous moves. You see, this first one blasting out right here. That's a 62.5% move right there. Wow. You see this next one right here. This is a 50% move right there. You see this next one right here. This is another 50% move right there.
And you're on the weekly here.
Yeah, we are on a weekly right here.
Okay.
This about a 20% move right there as well. This one over here, a phenomenal one, about 100%. And we can go onwards and forwards there.
So as Bitcoin on a weekly starts to pierce through the top end of that Bollinger Band, you can expect some fireworks as well as a stiff correction then immediately thereafter.
Right. So the way that the way that I look at Bollinger Bands is essentially as long as they're closing above them, in this case on a weekly, you're in the process of trending, and basically the direction is just up until it's not, until you actually close your first one below, and that typically does set off your the next like month or 2 month of correction. You see it back on over here where we're at right now. Guess what? Where or how much percentage gain have we seen since Bitcoin closed above its first one? Almost 30%, which is pretty well in line with kind of the average of what we've seen on those. Again, doesn't need to be exact, but just going off historical signals here, we do see that there is a lot of rhyme in the way that Bitcoin likes to play with itself. And take that as you will, and basically a lot of these things working together right now, which is again suggesting a little bit more short-term upside, but caution in this region right here, because there is going to be a point, and probably several points along these next few years where over-leveraged people are going to be washed out. Again, the market needs to generate liquidity for itself. It's not a free game, and it's a good idea to
So you bring up over-leverage, you bring up a few different things, but the way I see this is, and I've heard this on crypto Twitter, I've heard this repeatedly, is that when we get into these macro Bitcoin bull cycles, trading becomes less of an art and more formulaic, right? I've heard a lot of traders that kind of mock the 2017 bull run, saying anyone can just quote buy at support and they'll be fine type thing. Obviously, no one should over leverage, but I am quite interested. I've seen your success in trading. I don't want to downplay it. You spent decades building your skill set. You spent so long building your skill set. It's not something you can just quickly repeat, but I have seen a lot of traders kind of mock the low level that is required for trading. And I think trading is one of those things that gets a very, very negative rap here in crypto land because of the 100x leverages and all that stuff. It makes it like a roulette wheel spin more than an actual trade. But doing low leverage and sort of buying at support during these bull runs, is that a strategy that people can learn in any kind of reasonable time frame, or is it just you just gotta put in the years regardless? Is this a different environment?
It is a different environment, and I would actually agree with those people. There's a great saying that we used to have: a dumb bull will make more money than a smart bear in a bull market. It's just when things go up, we also had a great saying: don't confuse brains with a bull market as well. And a lot of people get euphoric in an area like this. Again, referencing 2017, I'm sure a lot of people are in this channel who are around during 2017, and what it feels like, and all those emotions and whatnot that you were dealing with as Bitcoin was just seemingly moonshotting almost every day. It seemed like at the very end there. Those are going to very likely come back, and that's likely going to be a good signal of when it is a cautionary time. But more on to the point of exactly what you're asking, which, if I gather properly, as Bitcoin moves up towards 15,750 now, nice. This is actually rather an interesting time for.
You're being proven right within your live stream here, or within. I guess we're not live, but yeah.
I love it. Yeah. I love it. But basically you're asking, is that a viable strategy to essentially buy at supports? Well, you have to have your areas marked off, right? So I've been kind of alluding to just a very generic and very simple strategy here. It really depends what you're trying to do. So for myself, again, understand, I'm a trader. I basically do it. I basically just do straight up day trading. I'm not really interested in trading for the long term. I basically even just hodled Bitcoin ever since it got back above 11,500 because I'd rather just trade Forex. It's just makes more sense on the shorter term timeframes when, Bitcoin's doing what it's doing. I don't think that there's too much. I don't think that there's too much to be gained from trading, in an environment like this when it's just gonna do its thing. So, to me.
Do you have just some old long positions that you just have on the books and you're just holding? Is that what you've done? You just have some old longs, and so you're already getting your long exposure pretty much, right?
I should be transparent about my positions. Yes, I've been long since about 10,500. So, and then I've been adding about 11,500, and then it's just all right. I don't really see. I'll be taking some off and probably playing some options and maybe selling some spreads soon, but to cover it up, but. there's not really much else, in my opinion, to be done. And then I'll be waiting for one of those major corrections, probably somewhere down around the weekly 21. And that's, potential out again there.
So if there's a real vicious down spike, right? Like say you get to like 17, 18K and things dump right down to that 12K level, maybe even wick down to like 11 or 10 or something like that. And someone puts in a long and they would just leave it there. Is that like a, an elementary way that someone could enter this? Someone like me who's not trying to actively manage positions, but is generally long, And by the way, guys, I'm just spitballing here. I'm not saying to do this. I'm actually asking because I'm curious. Krown is very good at this stuff, and I want to know what he thinks about these sort of simplified strategies.
To be fair, in an environment like this, is it going to work out? Is it probably going to be successful over time? Probably yes. I hate to admit it, but it's probably true. It's a terrible habit to get into long term if you do want to be an actual trader. But these are one of those special times where things are breaking out, and like I said, there will be downs. But for the majority, I do think that we're kind of entering into a similar environment that we saw back on over here and back on over here. Maybe not those exact same percentages or anything, but in general, I don't really see any real reason to be looking for any long-term downside here. Just those spikes down that likely recover relatively soon until we get into our next parabolic advance, very, very likely. So, leaving in a low leverage buy at one of those major levels, I would say if you are going to do something like that, of course, as always, this is not financial advice. I'm not a financial advisor, blah, 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 blah. This is first thing from financial advice. Okay, great. Anyways.
Do the opposite of this.
It's quite literally the opposite. The big thing with this is that you want to make sure, no matter what you're doing, what makes a good trade is not just your entry. It's also what accompanies it, which is typically your risk management and your position management. So you need to both have, or you need to have all trifecta at the very, very basis. This is as basic as it gets. You need to have your entry. That's the easiest part. You can just overlay some very obvious horizontals. Like I said, about 11.5 to 12,000 is a pretty obvious area. Anywhere the 21 comes in on the weekly, pretty obvious area as well. However, you also need to have, or at least if you want to be successful long term, you need to have some sort of risk management area that essentially tells you, that if you take this trade and it goes to this area, that trade is no longer going to work out in the way that you set out, and it would be more worthwhile to you, considering opportunity cost, to close it in order to keep your options open elsewhere.
So a stop loss.
At the same time, stop loss, yeah. And some people look at that as a liquidation price, which is who's going to be generating liquidity for this next round.
Okay. Well, that would probably be a much more highly leveraged position than a because as I've heard you explain it, the ideal entry, as far as I can describe it, I can't do it myself per se, but the ideal entry for a trade is one where you have a much shorter distance to where you know that it's going wrong than you have a distance to when you hope that it goes right. So say you have $100 to where you're saying, all right, well, this is actually not working out, versus $10,000 where you're like, this is the target for it working out. So that's like the ideal setup is, hey, if I enter in at 12K, let's just say it goes to 17, dumps down to 12. If it goes down below 10K, I say, you know what, this is no longer what I thought it was, and I'm out, right? And I've lost, what is that, 15% or something. Whereas I know that most likely, if this does what I think it's going back up to 17K and beyond, right? And so then you end up with these really nice balances where I have a potentially 2K downside and I have potentially, 5, 10, 100K depending on,
asymmetric risk and reward. Absolutely.
Yeah.
So, I mean, in the most basic sense, you can set that up with just very simple horizontals here. That's actually the main mode that I trade, typically speaking, mediated by a few momentum oscillators and volatility metrics as well. But for the most part, what I do is pretty damn simple. Again, it's probably not be too relevant to most people out there, but I'm actually a lot happier to trade something that is ranging like this, because what I'm essentially doing, as you said, is when I see a range like this form, is I will actually short in an area like this. Now, I did not take a short right here, which happened, I guess, a few days ago. But if I was trading this, I would have taken a short right here. And what I would have done is I would have had a stop loss right at the top of this liquid zone. And that's essentially what you're alluding to. What I'm looking for is to enter in as close as to the area that I would essentially want to take the trade off, because it's no longer going to be working. And that's why I'd choose this area right here, because that is essentially my breakout point. As if Bitcoin does close any sort of a 2 hour or 4 hour above this, I would imagine we're going to initiate that next measure move up to upper $16,000 region. So with that in mind, I'm happy to take a short here, because I'm only going to risk, about, I don't know, maybe 50 to $100 in price action. And I'm going to be gunning for, a move to the downside of the range, which is about an $800 move. So that's a trade that I'd like to take. And that's my preferred trading style. I want to be trading ranges, which I find work out a lot better in Forex and traditional land as well. Bitcoin right now is just, yes, the ranges are big. Yes, it's very nice. And it's very, very floaty as well. But I just don't really feel the need to trade it. Some like this that is mostly just up here. So yes, that is the general idea, and of course it works to the other side as well. If I wanted to buy this support right here, I'd essentially wait until price action comes as close as possible to 14.9 or $15,000. I'd have my stop loss somewhere right around here on this horizontal, and essentially be targeting about a $400 to $500 move up to the next relevant short-term area right here, which is 15.4. So that's what I'm doing for the most part. But again, that's really probably not going to be too relevant or too helpful for most people who are looking for long-term trades and stuff like that. Again, going back to what we were saying, for the most part, I really don't have any problems with this. I mean, the higher time frame that we go, the better this chart looks to me too. Going over here to the monthly, I mean, Bitcoin,
it's a beautiful chart, that monthly chart.
Yeah, I mean, basically Bitcoin closed about $100 lower than, or sorry, not even $100 low. It's about $50 lower or $60 lower than its prior all-time closing high, which was in December 2017 at 13,880. We opened here 13,816 bucks. So that's that's pretty damn good. I mean, closing on new all-time highs after a 3-year long consolidation like this, while putting in a higher low at the same time, while momentum oscillators once again back into the bullish control zone and nice and erect there. Monthly RSI tells us. I mean, this is extremely constructive behavior right here. So long term, I really like what I'm seeing, and the higher time frame that I go, like I said, the better it looks. I mean, if we go over here to a bi-monthly. There you go. And if we go over to a quarterly, which we're going to close, I believe maybe not this month, but next month. Yeah, it's going to be December, of course. We're going to have a chance to close on new all-time highs for a monthly, for a bi-monthly, and a quarterly. Coming in around, I guess at the end of this month for the monthly, but then for the rest, I suppose at the end of this year. So all of this is going to just set in, a more long-term bias here. I mean, anytime that you see Bitcoin close on new all-time highs on higher term timeframes like this, like you see over here, like you see over here, like you see over here, those are your big bad moves. And we're once again going to very likely have a chance to do that relatively soon in these next couple months.
I mean, it's sort of storybook stuff, right? Because you've been hearing about this stuff, the Bitcoin bulls, and I'm like you, right? I like to believe in that long-term situation as well. That's why I'm here. However, there are quite, for 3 years, when you see it kind of going the other way, it starts to feel a little bit like just huffing some hopium. But I genuinely, every time I think it through, I come out on the side of it. It doesn't make sense for Bitcoin to do anything else but to go up in a time of excessive money printing, in a time of monetary policy being in flux, in a time where the actual fundamentals, the idea, the concept is starting to gain traction from the world's most influential and powerful people, from the Jack Dorseys to the billionaires to, it's only a matter of time before we find out that the big banks have just been absolutely hoarding this asset. PayPal now, the externals are just so strong, and now the charts are starting to reflect it. I mean, it does feel like, in my opinion, there is going to be a move, right? There's going to be a cycle, whether it's this cycle, whether it's next cycle, where Bitcoin is more ends up becoming more popular and more exposed to the vast majority of people in the world than the people that don't have exposure to it. That's my belief, is that there's got to be sort of some inflection point where an asset like this ends up gaining its first, billion or 2 billion users. And so that's sort of my belief. It's not quite the same as Facebook, right? But there is a sort of point at which Facebook's growth went like this, because everyone already had it, right? And everyone was already on the train. And so, whether it's this or the next one, it sort of feels like there's got to be a moment like that soon. And what you're seeing in the charts here is pretty exciting as far as that's concerned.
Yeah, absolutely. And I mean, going back on that PayPal news, that's a pretty damn big thing. I know a lot of people had kind of pushed back on that, saying that it's not, exactly what they're looking for, but understand that these things do move slowly. And where I really want to differentiate myself, because I feel like I've been a little bit of a moon boy today, and I don't like coming off like that. But a good chart does deserve respect and praise. But for the PayPal thing, man, like, that's at the point when my girlfriend basically hit me up and she said, "This is kind of cool now. Hey, what's Bitcoin all about?" Now it's like in your face. Everyone knows PayPal. Almost everyone uses PayPal, and in our part of the world, and now people are just getting familiar with it. So these things, they move slowly. People were first kind of being primed with the idea that Bitcoin was only used for guns and drugs and whatever on the dark web, which it's true to an extent, but it's also used for plenty of other things.
It was true. It was true back then. It's a small percentage of what happens now, probably significantly less than cash US dollars, right? Which is the sort of pushback there, right?
Right, and I think that's a humongous first step, because the first thing is just awareness, and the second thing is just getting familiar with it, and slowly but surely you see the wheels turning. I mean, look at what's happened. Basically, the first time that we met, right? CMEs were, I don't know, about a year old by then, but the infrastructure has been building up ever since then, and we spoke about that quite a bit. That long term, I am bullish on Bitcoin, even though at that time I was bearish. More importantly, with it is that, when it comes down to it, I kind of lost my train of thought right there. Damn it.
You're talking about the CMEs being very new.
Right. Yes. Okay. So the infrastructure has been built up, this whole damn time. CMEs started to list Bitcoin futures. Then we got, I think, SIBO listed them for a second. That didn't go over too well though. But then they started doing options. And also what you're seeing right now is the next phase, in my opinion. You're seeing a lot of these major exchanges start to either go the official route. A lot more exchanges are trying to require KYC, especially after that BitMEX litigation. You see Deribit just bringing up KYC for all their users now. I imagine that Bybit or Binance probably already has it, but whatever the other big exchanges are, like FTX, are all going to have it at some point in time if they do want to survive this. Because what's very likely to happen over these next, I think it even comes probably this next year, but over these next 2, maybe 3 years, we're probably going to see a lot of these wild Western exchanges just get shut out in favor of listing Bitcoin on real, major U.S. exchanges, across the world as well, of course. And it's going to be legitimized in a way that, I think a lot of people have been looking for.
Yeah, well, I mean, definitely one of the most optimistic and exciting episodes we've filmed together. Even so much as to
been a fun time.
Even so much as to distill an elementary approach to this trading market, which I would never have recommended. But now that we're what appears to be, and this is what's so amazing, right? I heard some saying, I don't know if this is a real saying or if this is just some garbled crypto Reddit sort of translation, but it was the hardest times to really identify are the last third of a bear market and the first third of a bull market. And Absolutely. That's where you really don't know if this is just total suckers rallies or whether this is the beginning of something special. And it really starts to feel right now like this is the first third of a bull market. And that's obviously that's where you want to be, right? And we're looking at Google Trends still at rock bottom, all-time lows, right? Yeah. Almost all-time lows. Nobody knows yet. And there's something quite magical about that, of being in that early party. And that's kind of goes in confluence with my strategy on altcoins, which is if you are one of the earliest to get there, and you're not buying it after everyone's gone crazy over it, and you're not buying after the FOMO and the parabolic move, you have a much higher likelihood of being in profit over time because of that. And so it does feel like that's kind of in this new era for Bitcoin, that's kind of where we are, is things have not done their thing yet. We don't really know where the ceiling is, but it seems like the floor keeps getting lifted, and that's pretty exciting.
Absolutely, man. Absolutely.
Yeah, well, thank you so much for coming on, Krown. Of course, everybody, please go check out Krown's channel, Krown's Crypto Cave. It's linked in the description right below this video. As usual, I consider him cream of the crop when it comes to the TA stuff. Really appreciate your time, as usual, buddy, and we'll hope to have you back soon. Well, I hope you guys enjoyed that. I know I certainly did. Of course, if you guys are not already following Eric, go ahead and follow him. The link is in the description. If you guys enjoyed this, destroy that like button, and remember, each and every comment on this video is entered to win your very own Ledger NOS. If you guys want to connect with me personally, feel free to follow me on Telegram or Twitter. The links for both of those are in the description as well. And as always, I thank you so much for watching. My name's Elio Trades, and I'll see you very soon on the next episode.